Today, South Korean authorities reportedly close in on Do Kwon, but not in South Korea. Chinese police charge dozens with laundering billions of dollars using crypto. And Matthew Merle of Blockchain Coinvestors discusses venture capital performance in the space. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Digital currency markets are falling to start the week, ahead of another round of rate hikes from the Fed and FTX hearings on Capitol Hill. By noon Eastern, Bitcoin traded right around $17,000, Ether dipped to $1,200, and Solana dropped to $13. Okay, let's talk about the top stories. First, investigators might be getting closer to tracking down Do Kwon. The Financial Times reports that South Korean prosecutors think the co-founder of Terra is actually hiding in Serbia, and they're asking local authorities to help locate and detain him. Do Kwon is charged with fraud and violating South Korean capital markets laws. He's been missing since the collapse of the algorithmic stablecoin that he helped create, but has insisted that he wasn't in hiding. South Korean prosecutors said earlier this year that Do Kwon fled to an unknown country through Dubai and moved last month to revoke his passport. Next, police in China just arrested a gang behind $1.7 billion in crypto money laundering. The 63-person gang is accused of using pyramid schemes, fraud, and gambling to amass billions of dollars, then launder the illicit funds through Tether. The group also recruited various people around China to open crypto accounts to help launder the money. Those people then received a commission based on how much crypto they traded. The arrests come as Beijing continues its crackdown on crypto trading across China and tries to launch its own central bank digital currency. And here in the U.S., federal prosecutors are reportedly split over whether to bring charges against Binance execs. Reuters reports that some Justice Department officials want to charge top executives, including CEO Changpeng Zhao, with violating anti-money laundering rules. Meanwhile, some prosecutors say the DOJ needs more time to review the evidence. This investigation's been going on since 2018, and Reuters previously reported that Binance sought to dodge U.S. oversight, going so far as to launch the U.S. arm of the company, Binance US, in an attempt to insulate itself from investigations by U.S. authorities. All right, on to our main story. As we head into the new year, Crypto World's Talia Kaplan spoke with venture capitalist Matthew Merle, managing partner of Blockchain Coinvestors, about his analysis of this year's performance in the space and what to expect in 2023 as the aftershocks of the FTX collapse continue to weigh on the industry.
So you invest in companies focused on blockchain technology with more than $450 million of assets under management across the 6 funds you manage. And your combined portfolio includes more than 400 blockchain companies and projects. So with everything that has transpired this year, the bankruptcies, the scandals, and the crypto layoffs amid the so-called crypto winter, has your fund performance held steady, and have you now changed your investment strategy?
We believe, and we continue to believe, in an investment thesis, which is that all of the world's monies, commodities, and assets will be digitalized, and that will require all of the world's financial infrastructure to be upgraded. And this is inevitable. Everyone in the world now agrees, including all of the CEOs of the world's biggest institutions. And we invest behind that thesis. We're long-term investors. We don't plan to change. It's what we've been doing for 10 and 15 years, and we plan to continue to invest in that vein. So now going back to your first question, performance has held up very well for us. We're early stage venture investors. We don't invest in public crypto. We're not traders. We don't do staking or yield management. We do old-fashioned venture capital.
You say 2022 will go down in history as a bad investment year due to exogenous shocks, including COVID, inflation, and Russia's invasion of Ukraine, which impacted all asset classes and investor behavior. But as it pertains to crypto, you say investors are faced with the reality of a, quote, public liquid crypto blizzard. Can you explain the issues in crypto specifically?
So for us, crypto is a subcategory of digital assets. I could take a real estate investment, a fund. I could take a public equity, a private equity, and I could digitalize those, tokenize those, and make them available to anyone in the world through digital wallets and exchanges. Crypto is a subcategory of that. Of course, when we say crypto, we are normally talking about tokenized, distributed projects where a group of people are building open source software. And for those people, whether they be the developers developing the Lightning Network on Bitcoin or building solutions on top of Ethereum, for them, it's a long-term innovation and entrepreneurial endeavor. And the ups and downs of 1 month, 6 months, 9 months are not really the point. I know it's painful when markets go down, but for entrepreneurs and innovators, they have to take a long-term view. It takes a year, 3 years, 5 years to build a software solution and bring it to the world. And so what we've seen over the course of the last year is great volatility in public crypto projects and prices, driven by traders who are viewing them as tradable assets. However, for us as venture capitalists, what we're seeing is an accelerating adoption of digital monies, assets, and commodities, including by the world's biggest banks, asset managers, and payment companies. And we're actually seeing an acceleration of the opportunity for those crypto entrepreneurs who are setting off and are working hard and are developing and building great code.
So I spoke with retail investors who say that the FTX collapse has led to an erosion of trust and confidence. What is your outlook for 2023 from a retail investor perspective? And as it pertains to continued institutional adoption, do you think that will slow down now?
Yes, this is a great question, Talia, and it will slow down. So at this point, Talia, I do want to go back and I want to remind all of us of what we experienced back in 2000 and 2001. There were the dot-com booms, dot-coms everywhere we looked. Everyone was going public. Valuations were going to the moon, as we say today, and there was irrational exuberance, and it all came crashing down. It all came crashing down. 80%, 90% drops on average in dot-com share prices for the public dot-coms. Amazon was down 80%. Cisco was down 70 or 80%. And it was a terrible time for many people. But the innovation didn't stop. The innovation didn't stop for another 20 years. And of course, for the last 20 years, that was the main way to gain alpha in the public markets. Well, that's what's going on right now. The difference is we're digitalizing commerce, communications, content, and commerce. And today, this year has been a terrible year. It's been a terrible year for investors. It's been a terrible year for many crypto entrepreneurs. And adoption will get dinged. Retail adoption, institutional adoption, because people are frightened and they're nervous. But the innovation won't stop.
So you recently released your unicorn study, which noted, interestingly, that despite the recent bankruptcies, blockchain unicorns, so the startups valued at more than $1 billion, increased from 91 to 103 since the middle of this year. Were you surprised by this data point, and what does it show you?
Yes, we were surprised by it. As you rightly point out, Talia, there's more blockchain unicorns on the enterprise side today than ever before. On the crypto project side, there's been a significant reduction in the number of public liquid crypto tokens trading at more than $1 billion in value. So it's a tale of two halves. The equities pulling ahead in the private phase, if you will, the blockchain unicorn phase, and the crypto projects seeing a loss of value as the markets have gone down, the public markets have gone down. We were surprised because we thought that there would be more down rounds already and that the number of unicorns might have shrunk faster. Of course, we lost a few. We lost FTX and we lost BlockFi and we lost Celsius. because they were so interwoven with the if you will, large leverage stakes on public liquid crypto. So we anticipate that we are entering a phase of acceleration in terms of blockchain and projects built on top of blockchain rolling out globally. We're seeing institutional adoption now going up rapidly, and we think that's important too. And the fact that it went up this year, we began the year with substantially fewer. We're finishing the year at an all-time high, and we think that is important for people to realize.
Okay, now into one last thing. SBF has agreed to testify before the House Financial Services Committee tomorrow at the hearing about the collapse of the crypto exchange that he founded. We will be monitoring that hearing, and of course, we'll bring you the very latest developments. Well, that's all for Crypto World today, but we will be back again tomorrow, and we'll see you then.